Good evening, good afternoon, or good morning, whichever part of the world you're in. I hope everyone is doing well. Yeah, so I've seen a lot of people have requested on how to identify levels of supply and demand and how to draw them. So I won't really waste much time in this video. I want to make this video as short as possible so that at least you get something out of it. So supply and demand is, let's say, supply. This is where sellers, in simpler terms, this is where sellers are willing to sell at, which is at a premium price. Then demand is the smaller the wholesale price. Okay, so what are some of the things that we should look for when we want to draw a level of supply and demand? So the first thing that we need to look for is we need to look for areas where there are a lot of bull or bear momentum. So in the case of, let's say, supply, you have to look for areas where there are a lot of, where, let's say, price, the way price was in a rally like this, and all of a sudden we see massive discounts here, okay? Massive discounts, or rather bear candles, like big bear candles showing momentum shift, like from the rally to this. Here, we're going to be curious to know what really happened here, because like all of a sudden just price gets rejected and start falling hard like this. So this point here becomes our area of interest. Because we know that there's a possibility that when price comes to this point next time, we might sell, because what happened next is price was rejected at this point. So this is how first we identify this point. Then another bonus is if this point here that that where a lot of momentum here create, let's say, broke structural levels. Let's say here, this one here, it was our last low here. I see it broke at this point here, which shows that the sellers are indeed stepping into the market, because they're breaking structure of the market, pushing price to the downside. So here we can safely say that this is our area of supply. So what we do is you can either draw it like this. Mostly I advise you first change it to line chart. Change your candlestick pattern to line chart, so you're able to pinpoint the exact points where price changed from. As you can see, it was at exactly this candle close here. This candle close here. That's the first thing. We draw a line first. And you can clearly see here, this is the close of the candle. Then you change to the candlestick. So what you do is, in this case, you're going to have to draw the last up candle, or rather the bull candle in this case, which is this one here. Okay, you can draw this one, or this bear candle here, which is the more like a rejection candle. You can draw it, all of it, maybe till here. I think this one is the most advisable. Now draw it from here. Yeah, you draw it like this. You cover the rejection candle in this case. Yeah, since this isn't really, I wouldn't really classify it as an inside bar, because you can see this wick went above this high. So if it was an inside bar where the wick was actually inside this candle, we're gonna draw it nicely where we would have included this wick here. But since the wick went outside this high, we're gonna have to draw it just this alone. So as you can see, like I said, that since we've established that this area is an area of interest, you can see what happened next. Price came to this point, sort of like rejections. Then it went down. Simple as that. So it's the same thing almost here, though it's not really that of a clean supply. You can see here price was moving up, of which it came to test this level of supply, but as you can see, it also created a level of supply, though not that neat, because there are not those big candles that we're looking for. But as you can see here, this area here was violated. This area here was violated. Price actually broke through this area. So what we're gonna do is we have to draw the last candles, or rather look for mostly indecision candles. As you can see, this one here, it's an indecision candle. Draw it nicely like this. Then when price comes to this area, you see what's gonna happen. Price came, tapped into it, then see there was this nice candlestick pattern showing rejection. Then it went down just like that. So this is an area, this is an example of, let's say, supply. So now let's look for demand. Yeah, so let's look for demand. Demand, okay. No, this one is not that of a clean demand, but just give an example here. You can see that price was in a rally at this point here. Here, you can also establish that this one is an area of demand, because you can see how fast the candles came out from this place. Then from here, rejection, then there was a pullback. Then here you can see how big this candle was. So always look for the last candle before the drop started. You can see here, would have drawn this point here. In this case, the last candle before, there was a big candle to the upside. You can see what happened. You can see what happened. Price came to tap into this area. It went back here. You can also see here, there's a level of supply there. Here at this point here, before price decided to drop massively. You can see the nice candlesticks of indecision, showing that there was a nice level of supply there. So if you want, you can convert it into, or you can change it to the line chart to draw it nicely. You can see that one there. You can also see, always put this line on the candle close. You can see there. You can also see there. Yeah. You can clearly see there. You can see what was happening on these areas. See? Yeah, it's that simple. So always make sure that you look for these areas where there are a lot of big candles like this. It shows that sellers were pushing the markets. And if you see like this, buyers were pushing the market to the upside. So you have to first to identify this. And also the other point that you should always try to keep in mind is if these areas of supply or demand have broken structure, as you can see here, there was a high which was broken, which gives us a plus to enter a trade when price comes to these areas of imbalances. See? Yeah, so it's that simple. Always look for areas where price has broken structure. You can see here, when price came to this area, price had actually broken this area here, this low here. You can see here, this low was broken. Supply was created here because you can see how big the candles were from this point. So you could have entered safely here, yourself at this point. Yeah, so that's how it's done, guys. That's how it's done. Don't complicate things. Yeah, just make sure that you keep practicing. So same thing, let me also go on God. Yeah. Let me go on God. Yeah, let's see. Yeah, let me also go on gold so that you see that it is work on almost every pair. Just need to train your eyes, keep practicing more. You actually be able to identify these errors here. You can see here, though it's not that clean, you can see here, there's a nice level here where there are sort of like imbalances. This red candles pushing price to the downside here. Came, tapped into this area. There's a lot of rejection here and it went down. Let's see. Let's see. You can see how gold has a lot of spikes here. There's a lot of spikes. You can get spiked out if you're not careful. So it's very important to notice those areas where there are a lot of imbalances. You can see here, and this is gold we're talking about. So definitely you would trade it in much smaller time frames. You trade it in much smaller time frames to avoid bigger stop losses. You can see here, this one here. You can see there was a rally, then there was this base which was created before this pop-up. Price came here, went, came, went, just like that, because there was an error of imbalance. Same thing here, supply. Always, these levels always stand out, guys. They always stand out where there are a lot of bear candles, big bull candles, big bear candles. They always stand out. You see, just that simple, just that simple. It's that simple. So you don't have to complicate things. You don't need to know rocket science for you to draw these areas. No, they are very simple to draw. You just need to use your eyes. That's all. Use your eyes. That's it. Yeah, you can see here, there's a massive drop there. You can see here, there's a massive drop. So would have looked for selling opportunities when price reached this area. You can see what happened. Nice price action here, dropped. Yeah, so make sure that you practice these things, guys. Yeah, make sure that you practice these things. See here, nice demand area. Price came here, it went, just like that. So same thing with there. You can see what happened here. You see what happened here. Demand came back, spiked, went, just like that. Just need to practice these things. Yeah, just need to practice. Let me just do one last one so that we'll finish. You can see there. You can see there what happened. There was a drop, then there was a sideways movement, a base here. The sideways movement here, then a big drop here. So you can also see that there was a break of structure around this area. You can see that there was a break of structure around that area. Then what happened next? When price came to this point, it have sold there, bouncing price action, it have sold, and look at what happened. Dropped just like that. Yeah, so very important points. So same thing even here. Same thing even here. Yeah, see what happened? Price came just like that. So always make sure, guys, that keep these in mind. Don't complicate things. If you want more of such videos, just comment down below. We'll respond to your queries, whichever queries that you have. And just let us know if this has helped you in any way. Thank you very much. God bless.